Tax is a mandatory financial charge or levy imposed by a governmental organization on individuals or legal entities to fund public expenditures and government spending. The revenue generated from taxes is used for various purposes, including infrastructure development, roads, public transportation, public services, education, healthcare, sanitation, emergency services, national defense, and social welfare programs. Types of taxes. Taxes are broadly categorized into two main types. 1. Direct taxes. These taxes are levied directly on the income or wealth of individuals and organizations. The burden of direct taxes cannot be shifted to another person. Income tax, levied on the income of individuals, Hindu undivided families, HUFs, firms, etc. It's a progressive tax, meaning higher earners pay a higher percentage of their income as tax. Corporate tax, imposed on the profits of companies and corporations. Capital gains tax, tax on the profit earned from the sale of assets like property, shares, or mutual funds. Wealth tax, abolished in India in 2015, formerly levied on the net wealth of individuals and HUFs. Professional tax, levied by some state governments on individuals earning income through a profession or employment. Property tax, municipal tax, levied by local municipal bodies on property owners to fund civic services. 2. Indirect taxes. These taxes are levied on the production, sale, or consumption of goods and services. The burden of indirect taxes is typically borne by the end consumer, as the tax is included in the price of the goods or services. Goods and Services Tax (GST). This is a comprehensive indirect tax introduced in India in 2017. It has subsumed various central and state-level indirect taxes like excise duty, service tax, VAT, value-added tax, CST, central sales tax, and entertainment tax. GST aims to create a unified national market and eliminate the cascading effect of taxes, tax on tax. It has different slabs, e.g., 0%, 5%, 12%, 18%, 28%. Customs duty, tax levied on goods imported into India and in some cases, on goods exported from India. Excise duty, largely subsumed by GST, a tax on the manufacture of goods within the country. Service tax, subsumed by GST, a tax levied on services provided. Sales tax, largely subsumed by GST, a tax on the sale of goods. History of tax reform in India post-independence. India's tax system has undergone significant reforms since its independence in 1947, largely driven by economic needs, globalization, and the need for a more efficient and equitable tax structure. Early years 1950s to 1970s, high marginal rates and complexities. In the initial decades after independence, India adopted a highly progressive tax system with very high marginal rates, sometimes as high as 97.5% on income. This was often driven by a socialist ideology aimed at reducing income inequality and controlling wealth. Various direct taxes like estate duty 1953, wealth tax 1957, and gift tax 1958 were introduced. The Income Tax Act 1961 came into force, replacing earlier legislation and forming the basis of direct tax laws in India. Despite high rates, tax evasion was widespread due to the confiscatory nature of taxes, leading to low revenue collection. The era of liberalization 1980s to 1990s, moving towards rationalization. 1985, Rajiv Gandhi government. This period marked a shift towards rationalization of tax rates. The top marginal income tax rate was reduced from 62% to 50%, and the number of tax slabs was reduced. This was a crucial step towards a more moderate tax regime. 1991 Economic reforms. The severe fiscal and balance of payments crisis of 1991 necessitated comprehensive economic reforms, including tax reforms. The focus shifted from redistribution through high taxes to revenue productivity, and aligning the tax system with a market economy. Direct taxes, further simplification and reduction in income tax rates were implemented. The number of personal income tax brackets was significantly reduced, e.g., to 3 slabs like 20%, 30%, 40% in 1992-93. Corporate tax rates were also unified and reduced. Indirect taxes. Steps were taken to broaden the tax base and rationalize customs duties and excise duties to promote trade and industry. The Modified Value-Added Tax (MODVAT) scheme was introduced to mitigate the cascading effect of excise duties. 2000s onwards, towards modernization and GST. Service Tax 1994. Initially introduced on a few selected services, it gradually expanded its coverage, becoming a significant source of revenue. Value-Added Tax (VAT), state level 2005. Many states replaced their existing sales tax with VAT, which was a significant step towards a more scientific indirect tax system, allowing for input tax credit. Direct Tax Code (DTC), proposed but not implemented. The idea of a new comprehensive direct tax law to replace the Income Tax Act, 1961, was explored to simplify the tax structure and improve tax administration, but it did not materialize. Goods and Services Tax, GST 2017. This was arguably the most significant tax reform in India's history. It replaced a multitude of central and state indirect taxes, creating a single, unified indirect tax system across the country. GST aimed to eliminate the cascading effect, simplify compliance, and boost economic growth by creating a common national market. Faceless assessment and appeals. In recent years, the government has introduced measures like faceless assessment and appeals for income tax to increase transparency, reduce corruption, and improve efficiency. Reduction in corporate tax rates 2019. Corporate tax rates were further reduced to make India a more attractive investment destination. Impact of tax reforms. Revenue generation. Reforms have aimed to improve tax compliance and widen the tax base, leading to increased government revenue. Economic growth. Lower and simpler tax rates have generally been seen as conducive to economic growth by incentivizing investment, consumption, and production. Ease of doing business. Simplification of tax laws and procedures, particularly with GST, has aimed to improve the ease of doing business in India. Reduce litigation. While new reforms often bring initial challenges, the long-term goal is to reduce tax disputes and litigation. Global integration. Tax reforms have also been influenced by the need to align India's tax system with international best practices and facilitate global trade and investment. In conclusion, India's tax reform journey has been a continuous process of evolution, moving from a highly complex and high-tax regime to a more streamlined, moderate, and technologically advanced system, with GST being a landmark achievement in this journey.